Hello everyone, welcome to EduTap and welcome to today's session. So today we are going to do the complete revision of the June 2024 for the RBI notifications for the RBI press releases for your RBI Grade B 2024 examination. I hope you already are preparing very well, and in today's session we are going to do a lot of MCQs so that your preparation is boosted and you are able to understand that at what level you are standing and how much more you have to practice the MCQs, how much more you have to keep everything in your mind. Okay, so today we are going to have the revision for the June 2024 notifications and the press releases. I hope you are preparing very well and I want you all to answer most of the questions in the correct manner. Okay, so this is the revision session that many of you were demanding a lot. Okay, so good evening Sorish, Pushparaj, Titanium. Good evening everyone, welcome to the session, and let's start with this session. This is going to be very important for your revision, not only for your revision, for your understanding that which notifications, which press releases are very important. So let's get started without any delay, but before that, do subscribe to the YouTube channel of EduTap to continue getting these videos, as well as join our Telegram channel, because in the Telegram channel you are going to get the PDF of the session. So download the PDF from the Telegram channel, and the link of the Telegram channel is provided in the description box below. Good evening everyone. Good evening Priya, Pallu and Padmini. So let's start with the first question. I hope you will be easily able to answer this question. So this is your first question. Try to answer this question. Let's see how many of you are able to answer this question. So starting with our first question, this is regarding the bulk deposits. The Reserve Bank of India has recently released the directions for the bulk deposits, the definition of the bulk deposits for the scheduled commercial bank, for the small finance bank, for the local area bank. So which of the following is correct? I have started getting the answer. That shows that how well you are preparing if you are able to read the question and answer the question fast and in the correct manner also. So first of all, the term bulk deposit means single rupee term deposit. Bulk deposit means single rupee term deposit that is having the minimum of 3 crore and above for the scheduled commercial bank, excluding the RRBs, So bulk deposit means single rupee term deposit of minimum of 3 crore and above for the scheduled commercial bank, excluding the RRBs. What is the limit for the RRBs? What is the minimum limit of RRBs? That you have to tell me. Write down in the chat box that what is the limit for the, what is the minimum limit for the RRBs. The term bulk deposit would now mean single rupee term deposit of rupees 1 crore and above for the local area banks. That is absolutely correct. The term bulk deposit would now mean single rupee term deposit of rupees 3 crore and above for small finance bank. So for the scheduled commercial bank and for the small finance bank, the minimum limit of the bulk deposit is 3 crores and above. For the local area banks, for the regional rural banks, the minimum limit of bulk deposit is 1 crore and above. Very good, very good. So here only second statement was right, and that's why the answer is 2 only, because here you had to answer the correct answer. So answer is E. So this bulk deposit we have discussed in length, that what are the bulk deposits and what are the limits of the bulk deposit. Before what used to happen, that for the scheduled commercial bank and for the small finance bank, the limit was 2 crore and above. But now for the scheduled commercial bank and small finance bank, the limit has become 3 crore and above. Before, for the regional rural bank, the limit was 1 crore and above. Now for the regional rural bank, it is same, that the bulk deposits are the single rupee term deposit that are of 1 crore and above. But for the local area banks, the same limit has been introduced, that for the local area banks, bulk deposit are single rupee term deposit of 1 crore and above. So these are the current limits that you have to remember. And what were the prior limits? From that, this is the increase that you can see. Now for the urban cooperative banks, do you remember the limit? For the tier 1, there are 4 tiers: tier 2, tier 3 and tier 4. So there are 4 tiers of urban cooperative bank. For the first and second tiers, or for the for all the urban cooperative banks that are not the scheduled urban cooperative banks in the tier 3 and tier 4. So for the scheduled urban cooperative banks, for the tier 3 and tier 4 scheduled urban cooperative banks, the limit is 1 crore and above. For all the other urban cooperative banks, let it be in tier 1, let it be in tier 2, let it be non-scheduled, scheduled, for all the other urban cooperative banks, the limit is 15 lakhs. Very good, very good. So single rupee term deposit of rupees 1 crore and above for the scheduled urban cooperative banks categorized as tier 3 and 4 urban cooperative banks. This is the definition of bulk deposit now. Okay, next is single rupee. Bulk deposit are the single rupee term deposit of rupees 15 lakh and above for all the other cooperative banks other than the scheduled urban cooperative banks in the tier 3 and tier 4. And what is the criteria for the different tiers of the urban cooperative bank? That is the deposit size. According to the deposit size, they are divided into the 4 tiers, and the tier 1 UCBs are also the salary earner UCBs and the unit UCBs. So this is the brief idea. If you want to get more clarity about this, you can see the complete session, but these are the facts that you have to remember from the news article that I have brought for you. Next news article is again a very important and easy news article. We can say that Reserve Bank of India organized the HARPER 2024, that is Innovation for Transformation. So this was the HARPER 2024 was organized by the Reserve Bank of India. This was the hackathon. Now try to tell me that which of the following statement is or are incorrect, that you have to tell me. So try to answer this question. So the hackathon invites participants to develop the solution using the technology and innovative approach under the different themes. So there were 2 themes, that was zero financial frauds and being Divyang friendly. So under the 2 themes, there were problem statements that were given. Under the zero financial frauds, there were 3 problem statements that were given. Under being Divyang friendly, there was 1 problem statement that was given. So against these problem statements under the 2 themes, there was the solution that had to be developed. Okay, so different participants can give the solutions under this hackathon. Now HARPER 2024 is owned and sponsored by the Reserve Bank of India, and it is hosted not on the Reserve Bank Innovation Hub platform. No, it was hosted on the APIX platform. Okay, so APIX platform is the Application Programming Interface Exchange platform. So on the APIX platform, the hosting of the HARPER 2024 has happened. Next is accurately identifying the banknotes by visually impaired is one of the problem statements. Yes, this is the only one problem statement under being Divyang friendly. So only the second statement was wrong. First and third were correct, right? So the answer was, yes, answer was E, that is 2 only. This was the only incorrect statement. So there are 2 problem statements under the first problem statement. There are 2 themes under the first theme. There are three problem statements. Under the second theme, there is only 1 problem statement. Okay, so this is HARPER 2024. This is the 3rd global hackathon that has been conducted by the Reserve Bank of India. Now this global hackathon, this Reserve Bank of India hackathon that has been conducted, this is conducted on the APIX platform. Okay, who can apply? So anyone can apply. Individuals 18 years and above can also apply. Okay, next is now coming to the next news article, that the Reserve Bank of India has said that we are going to have a digital platform. Okay, we are going to have a digital payments intelligence platform. Digital payments intelligence platform. Now there is a committee that has been made in regards to this platform, that how this platform will be made, what this platform will be doing, or how this platform will create the network level intelligence or the data sharing portal or something. So this digital payments intelligence platform, for this there is a committee that has been made by the Reserve Bank of India, and the chairman of the committee is AP Hota. Very good. Sri AP Hota is the chairman of the committee, and it is expected that within 2 months the committee will give its recommendations. So this is the basic idea, that the Reserve Bank of India has said that to address the digital payment frauds. The digital payment frauds are increasing very fast, and to address these digital payment frauds, there is going to be a platform that we will be constructing, that we will be developing, and there is a committee that is going to work, or that is going to give recommendations for this platform, that is the digital payments intelligence platform. And this chairman, Shri A.P. Hota, is going to chair this committee to examine various aspects of setting up the digital public infrastructure for digital payment intelligence platform. And it is expected that within 2 months, the recommendations are going to be given. Okay, this is the idea. Next question, try to read this question, try to tell the answer. This is also very important because there is some changes that has happened in the PSL norms, and you know how important the PSL norms are. So try to answer this. So the Reserve Bank of India has revised its incentive framework to push the banks to increase the flow of priority sector lending to the districts that are having less of the PSL, that are having less of the priority sector lending. So the priority sector lending that is happening, there are 2 lists that are being made. So one list is the district that is having less of the PSL. So less of the PSL means per capita priority sector lending is less than rupees 9,000. And the other list are of the districts that are having the priority sector lending, too much of the priority sector lending, that is per capita rupees 42 per capita, that is greater than rupees 42,000. So there are 2 lists that have been made. One list are of the districts that are having less of the priority sector lending, that is per capita priority sector lending in these districts are less than rupees 9,000. The other category of districts are the ones that are having too much of the priority sector lending. So they are having per capita of the priority sector lending of more than rupees 42,000. So they are having too much of the priority sector lending. So now it has been said that if you are giving incremental credit to this category of the districts, then your priority sector lending will be considered at the weight of 125%. So that is the incentive. So with effect from financial year 2024-25, a higher weight of 125% shall be assigned to the incremental priority sector lending that is happening to such districts that are having less of the PSL. That is, the per capita PSL is less than 9,000 rupees. So if you are doing incremental PSL to these districts, your weight will be 125%. Now, a lower weight of 90% will be assigned for incremental PSL, the priority sector credit, in the identified districts where the credit flow is comparatively very high. So, comparatively very high are the districts where the PSL is going per capita more than rupees 42,000, not 27,000 but rupees 42,000. Okay, so this statement is wrong. The districts other than those mentioned in the 2 lists. So there are 2 lists. So the districts that are not mentioned in the 2 list. So if you are giving PSL, incremental PSL to such a district, then your PSL will be counted as 100%. Okay, then your PSL will have the existing weight of 100%, not 150%. So only first statement is correct, second and third are incorrect, and you had to find the correct statement. So only one is the answer here. D is the answer here. Very good, everyone has given the right answer, good to see. So I have taken a complete session on this incentive framework that is very easy to understand. Before, from the financial year 2021-22 onwards, there were norms that 125% of the weight will be considered for the PSL lending of per capita less than 6,000, and the lower weight of 90% would be considered for the per capita PSL lending of more than 25,000. And for other districts, the weight will be 100%. But now the change has happened in the guidelines that 125% of the incremental credit, 125% of the weight will be considered for the incremental PSL if that district is having per capita PSL less than 9,000, and the incremental PSL, if it is going to such districts with very high PSL, lower weight of 90% will be considered, and very high PSL means per capita of the PSL that is greater than 42,000, and for all the other districts 100% of the weight will be considered. So this is the whole idea, and this is with effect from financial year 24-25, and this is going to be this is valid up to financial year 26-27. This is the idea. Now coming to the next question, so there are the definitions for micro, small and medium enterprises. So you have to tell that as per the medium enterprises, which of the following statement will be correct, okay, or which of the data points are correct for the medium sector. So try to answer this. So here, simply, for the medium enterprises, there should be the investment in the plant and machinery or equipment does not exceed 50 crores and the turnover does not exceed 250 crores. Okay. So here also the answer is D. That is, here for the micro enterprises 1 crore and 5 crore, small enterprises 10 crore and 50 crore, medium enterprises 50 crores and 250 crores. So this is the definition for the MSMEs that you have to remember. Okay. And before it was said that there has to be some criteria that has to be met for the MSME lending to become the priority sector lending. So if you are giving the loan to MSMEs, there is a criteria that has to be followed, then only your loan to the MSME will be considered under the priority sector lending. That means if a bank is giving loan to the MSME, there is a criteria that has to be followed, then only your or the bank's credit will be considered as PSL. But now there is no such criteria. If a bank is giving loan to a MSME, that will automatically be considered under the priority sector lending. So this is the basic idea, that all the bank loans to MSMEs shall qualify for classification under the priority sector lending without following any particular criteria. Now coming to the next question. So this is regarding the balance of payment data and the data for the reserves. Foreign exchange reserves. So the RBI has released the data for the balance of payment 2023-24 data has been released, and the data for the reserves has also been released. So try to answer this question. Try to tell me that what is the right answer here. So on a balance of payment basis, excluding the valuation effect, the foreign exchange reserves increased by $63.7 billion. Now foreign exchange reserves in the nominal terms, including the valuation effect, has increased by how much, that you have to tell me. So foreign exchange reserves, if we consider the balance of payment effect, so balance of payment has got the overall surplus of $63.7 billion, and that's why foreign exchange reserves have increased by $63.7 billion. But there is also the increase in the value of gold. So in the foreign exchange reserves, there are the gold reserves under the foreign exchange reserves. So the value of the gold reserves have increased by $4.3 billion. That means in total, the foreign exchange reserves have increased by $63.7 billion and $4.3 billion. So that is $68.0 billion. So you can understand that the foreign exchange reserves have increased by $68 billion. We can say $68 billion because of the valuation effect of the gold, because the gold value has increased. So this is the answer, and we have discussed this data point in the session already, that the current account is in deficit, but the deficit is lower. The deficit is of $23.3 billion, while the capital account is in surplus. The capital account is in surplus of $87.0 billion. That's why you have a reserves of, that's why the balance of payment is in surplus of, is in positive of $63.7 billion. So these are going to the reserves. So the reserves are increasing by $63.7 billion, but the gold value has increased by $4.3 billion. So this is the valuation change. The gold value has increased by $4.3 billion, we can say. So when you add $4.3 billion, you get that the foreign exchange reserves in the nominal terms, in the including the valuation effect, is $68 billion. So this is the whole idea that you need to understand, that what is the total foreign exchange reserves including the valuation effect. Next question is that the India's current account deficit moderated. That is correct. That because of the current account, you can see that the current account was in deficit of $67 billion. But now in the 2023-24, the current account was in deficit of only $23 billion. So current account deficit has moderated, has came down to $23.2 billion from the 60s something billion dollars. So what is, now this is the percentage of GDP. What percentage of GDP? Very good, 0.7% of GDP. So our deficit has come down from 2% of GDP in the 2022-23 to 0.7% of the GDP in 2023-24. So that is a big thing for our country. Okay, so this is the data point that you need to remember from the examination perspective. So this is the important data point. Okay. Next is India's current account balance has recorded a dash of 5.7 billion, that is dash percentage of GDP in quarter 4 of financial year 24, that is financial year of 2023-24. Now we usually do not discuss the quarterly data. We say that okay, it is not as important. But for this particular case, the quarterly data is very important, especially for the current account. Why? Because it is very much in news and it is very much in talk. Most of the newspapers, most of the news articles are discussing this topic, because this is a big achievement of our country that after a long period of time, the current account balance has recorded a surplus of $5.7 billion, that is 0.6% of the GDP for the quarter 4. So in the quarter 4 of the 2023-24, we have got a surplus of 0.6% of the GDP. So this is a big deal that India's current account balance has recorded a surplus of 0.6% of the GDP in the quarter 4. This is basically because of the increase in the services export and more of the transfer payments, remittances that we have got. So service exports have increased by a lot, and we are getting more of the transfer payments. So these are the reasons of the increase of the surplus in the current account. Okay. So this is the data points. Now coming to the next question. So try to answer this question. This is in regards to the external debt. Okay. So the external debt to GDP ratio declined to 18.7% at the end of March 2024 from 19% at the end of March 2023. So reflecting the country's robust external sector profile, the share of short-term debt with original maturity of up to 1 year in total external debt has declined to what percentage, that you have to tell me, at the end of March 2024. So the share of short-term debt has decreased to 18.5%. So this is the data point that is also again very important, because it was directly mentioned in the newspapers. Okay, that the share of the short-term debt has decreased in the total external debt. Okay, so this is the basic idea, that the external debt to GDP ratio has declined to 18.7% as against 19%, and out of the external debt, the short-term debt share has declined to 18.5%. Okay, now this was mentioned in the financial stability report also, so this data point becomes very, very important. Okay, so this is the idea. Now coming to the next question, try to answer this question. Till then I will answer Phoenix, that how to cover the RBI circulars. You have to like you can see the Finance 360-degree session, and if you have any course, the course must be providing you some PDF. So through that you can cover the RBI circulars. Okay, RBI circulars, I hope you mean the RBI notifications and RBI press releases. Okay, try to answer this question now. Now this is very important. Okay, I have started getting the answer. The answer is C. Okay, let's see. See, what has happened that in June 2024, the Reserve Bank of India released a notification. Okay, that was regarding the review of SDF, ways and means advances, and overdraft. There was a review that has happened of SDF, WMA, and overdraft for the state governments and for the union territories. Now, first of all, what is WMA? We will go to the review, that what is the review and what has been changed. But before that, what is WMA, what is SDF, what is overdraft? And you must know about the interest rate of these facilities also, because they are very important. Directly a question can come on the interest rate because they are connected with the repo rate. So interest rate on the SDF, WMA and overdraft shall continue to be linked to the policy rate of the RBI, that is the repo rate of RBI. So this first statement is correct. SDF if availed, if you are availing. So let's discuss that what is SDF. So SDF is now the SDF is a facility that can be taken by the state governments, or it can be taken by the union territories against the collateral. Now there are the CSF, there is a CSF, or there is a GRF. These are the funds that the state governments are maintaining with the Reserve Bank of India. Okay, so CSF is a consolidated sinking fund This is a consolidated sinking fund, and the GRF is your guaranteed redemption fund. Now the state governments, many state governments and union territories on the voluntary basis, they are maintaining these funds as the reserve funds with the Reserve Bank of India. So CSF and GRF are reserve funds that is maintained by some state governments with the Reserve Bank of India. This is on the voluntary basis, or there is no mandatorily that you have to do so. So the some of the state governments are maintaining CSF or GRF with the Reserve Bank of India. Now if the state governments require loan, so if the state governments require loan, they can go to the Reserve Bank of India that, okay, we have invested in the CSF and GRF, we have some funds in the CSF and GRF, you can keep that as collateral and you can give me some loan. Try to think about it that you are a person. Let's say, let me take an example that we have any girl, okay, Padmini. We have Padmini here. So Padmini has a fixed deposit. Now she has a fixed deposit of, let's say, 50 lakhs. Can she take some loan against this fixed deposit, because this fixed deposit is of 10 years? So she cannot, like, she do not want to take the money out before the maturity. So can she take a loan against this fixed deposit? Yes or no? Just think, like, wait for it. I will tell you everything. Yes or no? Yes or no? If you have a fixed deposit, can you take a loan out against the fixed deposit, keeping the fixed deposit as a collateral? Tell me very fast. Yes or no? Yes. Okay, Ritika is saying yes. Yes, very good. So if the state governments have some reserves under the CSF and GRF with the Reserve Bank of India, can the state governments ask for loan against their funds with the Reserve Bank of India? Like, now is it understandable that the state governments have some funds or have some deposits in the CSF and GRF? They can ask the Reserve Bank of India that, okay, give us loan against keeping this as collateral. So this is the idea that SDF is availed by the state governments against the collateral of consolidated sinking fund or the GRF. As well as the state governments also have some government securities. They have bought some central government securities. They have bought some auction treasury bills. So if the state governments have bought the auction treasury bills, or they have bought some other government securities of the central government, they can keep these government securities, auction treasury bill as collateral, and they can take the loan from the RBI. So like the banks, the banks keep government securities as collateral with the RBI, and the banks take loan from the RBI. Similarly, state governments can keep these securities as collateral with the RBI and can take the loan from the RBI. Is it understandable? Is it understandable? Now, SDF, if the state government want to take loan, if availed against net annual increment investment in CSF and GRF. So state governments are going to the RBI that against the CSF and GRF, you can keep it as collateral and give us loan. So RBI will give the loan to the state governments at repo rate minus 2%. At repo rate minus 2%. If the SDF is availed by the state governments and it is availed against the collateral in the government securities and ATPs. Now the state governments are keeping the ATPs or the government securities as collateral. RBI will give loan to the state governments at repo rate minus 1%. Okay. Now there is also one facility, that is ways and means advances. What has happened that suddenly the expenditure, the state governments are in deficit. State governments are in deficit. That means their expenditure is greater than their receipts, and they require immediate funds because they have to pay to the MSMEs, they have to pay to the manufacturers, they have to pay to the companies. So how they are going to pay? So immediately when the state governments or central governments, they require the immediate funds or the short-term funds, they can take it under the ways and means advances. Okay. So ways and means advances, if outstanding up to 3 months. So ways and means advances are usually for a period of 90 days. That is for a period of 3 months. Okay. So if outstanding up to 3 months from the date of making the advance, so if the WMA is taken for 3 months time period, so the interest rate will be repo rate, the rate will be repo rate. But if WMA, let's say the government is not giving the money back now, the government has taken the money under WMA and government is saying that instead of 3 months, we are going to keep it for 1 month extra, that is 4 month, that is 1 month extra. So for that 1 month extra, the RBI will charge extra penal rate, that is repo rate plus 1%. So if outstanding, if the WMA is outstanding beyond 3 months from the date of making the advance, the rate that will be charged will be repo rate plus 1%. So this is the whole idea. Now there is also one facility that is provided to the state governments, that is overdraft facility, and this is also provided to the central government also. So if availed up to 100% of WMA limit, let's say WMA limit is rupees 60,000 crores, that this much of the loan the state governments can take under the WMA limit. Now the state governments are saying we need more money. This 60,000 crores is not enough for us. So we need higher amount than the WMA limit, and the limit has been crossed. Now they are taking extra loan of rupees 30,000 crore, that is above the WMA limit. So if that is overdraft, you are taking too much of the money or extra money than the WMA limit. So overdraft, if availed up to 100% of WMA limit, that is if 60,000 crores is the WMA limit and the state governments are asking for 60,000 more or 50,000 or 60,000 more, that is up to 100% of the WMA limit, then the rate, should it be charged more or should it be charged less? The WMA rate is repo rate, and if you are keeping WMA for a higher period of time, you have to pay repo rate plus 1%. Now if you are taking overdraft, if you are taking more of the loans, so you should be paying higher also, that is repo rate plus 2%. Let's say that the state governments are taking even higher limit, that is even higher than this, like 60,000 limit is the WMA limit, and you can see that 100% of the overdraft can be taken, that is 60,000 crores more the state governments can take with the higher penal rate, with the higher interest rate. And if you want more than this, if it exceeds 100% of even the WMA limit, the overdraft, then the rate will be charged very high, that is repo rate plus 5%. So this is the overall idea of the WMA, SDF and the overdraft facility. Okay. So this is the basic idea. Now SDF, if availed against the CSF and GRF, this will carry the repo rate minus 1%. So this will carry the repo rate minus 2%, not 1%, minus 2%. WMA, if outstanding up to 3 months from the date of making the advance, will carry the rate at repo rate. So first and third statements are correct. Second statement was wrong, and you had to tell the correct statement. That's why 1 and 3 is correct. 1 and 3 is correct. Any confusion in the SDF, that is special drawing facility, WMA, that is ways and means advances, and overdraft facility. Is it clear? I have not taken a separate session on this limits and such. That's why I am explaining it here, so that if you go and you see the notification, you are able to understand the words in the notification. Is it clear? WMA, it is ways and means advances, where if the governments are having a deficit or they require the immediate funds, they are able to take. SDF is special drawing facility, that is a kind of loan against the collateral. Now what is the collateral? It can be CSF, GRF, where lesser interest will have to be paid, and if you are keeping the collateral as the ATBs or the government securities, a little higher, that is repo rate minus 1% will have to be paid. Clear? Enjoyed this part? Have you understood this part? Most of you are saying clear. Now will you get confused in this WMA, SDF and overdraft, because many of the queries come for this part only. Good to go? Okay. Coming to the next question, now try to answer this question. So this is actually the news article. This is actually the news article that has come out. So what has happened, that there was a, so simply let me tell you that the limits that was decided for the SDF, for the WN, for the ways and means advances, and for the overdraft. So these limits were last revised on April 1, 2022. So the Reserve Bank of India said that we need to review the ways and means advances, the standing the spatial drawing facility, and the overdraft facility. We have to review it. So there was a working group that was constituted. So based on the recommendations made by the working group constituted by the Reserve Bank of India and consisting of select state finance secretaries and taking into account the expenditure data of the states for the recent years, it has been decided to revise the WMA limits to increase the ways and means advances limits of the state governments and union territories effective from July 1, 2024. The revised aggregate limit for the state governments or union territories under the ways and means advances will be 60,118 crores as against the previous limit of 47,000 crores, and for the different states what will be the this is the overall limit now, that for all the state governments and union territories the cumulative aggregate limit is 60,000 crores. For particular states, for individual states, what is the limit? So for that a whole list has been given. You cannot remember all the data of the 29 states and such. So I have skipped that. That is not important. Okay. Now spatial drawing facility. So SDF that is again availed by the state governments or union territories shall continue to be linked to the quantum of their investment that they have done in the marketable securities. So this SDF can be taken by the state governments or union territories against the investment, against the collateral of the government securities, against the collateral of the auction treasury bills, and against the collateral of the CSF and GRF. So based on the recommendation made by the working group constituted by the Reserve Bank of India, the CSF and GRF, it has been decided that the maximum limit of SDF that you can take against keeping the CSF and the GRF as the collateral will be 50% of the value of the CSF and GRF. Okay. So simply based on the recommendations made by the working group, it has been decided that the maximum limit of the SDF of the spatial drawing facility that can be taken by the state governments or the union territories against the investment that they have done in the CSF or GRF shall be 50% of the lower of their outstanding balance of the funds as on the last date of the second preceding quarter or the current balance held in CSF or GRF. For investments that is held in the auction treasury bills, the maximum limit of SDF shall be again 50%. That how much you can take under the SDF, that will be 50% of the investment that you have done in the ATBs, 50% of the lower of the outstanding balance or the current balance. Okay, so this is the basic idea that for investments held in ATBs, the maximum limit of SDF shall be 50%. 50% of the lower of outstanding balance or the current balance. Is there any confusion now? This is the whole notification that the RBI has released in regards to the review of the WMA, SDF and your overdraft. Notification at least 3 months, and you should go back to April, May, June, July, August. 5 months, or if you are not able to do 5 months, at least do 3 months, June, July, August. Okay. No confusion? No confusion. If you have any confusion, kindly ask me. Otherwise, let's move forward. Let's move forward. No. 50% of SDF, no. SDF is what? It is a facility. It is a loan. How much loan you can take? How much SDF can you take? So, 50% of your collateral value. Collateral value like CSF, GRF. So 50% of your collateral value, we can say 50% of the lower of the current value of the collateral or the outstanding balance value of the collateral. This is what the notification is saying. So here it is saying that SDF, the maximum limit of SDF or the maximum SDF that a state can take, state government can take or union territory can take against their collateral of CSF or GRF will be 50% of the outstanding value of the CSF or GRF or the current value of CSF or GRF, because loan you can take against your collateral value, right? Now try to give the right answer of this question. This is very important, very important topic right now, SROs. Ritika, is it clear? If it is not clear, I will explain you again. Is it clear? Okay. Now, the self-regulatory organization, the Reserve Bank of India has said that there is the increase. There is the increase that is happening of the regulated entities, the banks, the NBFCs, they are increasing a lot. The technological change is coming and they are using the new technologies and such. So there is also the requirement of self-regulation, okay, because RBI is also limited in its overview, okay. So SRO, self-regulation is required, and for that self-regulatory organization is required. So SRO should operate as a true representative of the sector that they are working for. Accordingly, there is the membership criteria that has been told by the RBI, and the RBI has invited the application in which the RBI has given some rules and regulations for the SRO NBFCs. Okay, so first of all, the SRO for NBFC sector is primarily working for the NBFCs in the category of ICC, Investment and Credit Company, housing finance company, not microfinance institutions, it is housing finance companies, and the NBFC factors. So the SRO in the NBFC sector should work for the NBFC, Investment and Credit Company, housing finance company, and the NBFC factor, okay. To ensure fair representation to smaller NBFCs, the SRO shall have at least 10% of the total number of NBFCs in the base layer as per the scale-based regulatory framework. So 10% of the members under the SRO should come from the base layer, that is the investment and credit companies as well as the NBFC factors that are present in the base layers. 10% of the total members should come from the base layer, from the ICC and from the factor NBFCs. Failure to achieve the membership within 2 years, will you will be liable for the revocation. So here, yes. So here the right answer is that first statement was wrong. Even the third statement was also wrong. Only the second was correct. And you had to tell the incorrect statements 1 and 3. 1 and 3, that is C is the answer here. Correct? So we have discussed the SRO for the NBFCs, the guidelines for the SROs for the NBFCs. SRO are simply, they are going to work as a linkage between the RBI, Reserve Bank of India, as well as the what do we have here? The NBFCs, okay. So SRO, NBFCs, SRO for NBFCs, they are going to work as a linkage between the RBI and the NBFCs, and they will help in the regulation of the NBFCs, and they will help in the development of the NBFCs also. So all of this we have discussed in the session. Now, basic idea of SROs is that SRO NBFCs, they are going to, like, the membership of the SRO NBFCs should be mostly from the ICC, HFC, and the factor, NBFC factors, okay. It should be a good mix of these 3 NBFC categories, and to ensure the fair representation, at least 10% of the members of the SRO, NBFC SRO should be from the base layer, that is from the ICC and the factors, because HFC, this category of the NBFCs cannot be in the base layer. So ICC and factors, they can be in the base layer also. So from them, at least 10% of members should come. Failure to achieve the aforesaid membership within 2 years of the grant of recognition can make you liable for revocation of the license, okay. So how many layers are there? There are 4 layers of NBFCs. You can read about the 4 layers, and the ICC and the NBFC factors, they can come in the base layer also. They can come in any layer, but the housing finance company can only come in the middle or the upper layer. So this is the basic idea. Now coming to the next question, let's see how many of you are able to answer this question. So here, okay, I have started getting the answer. I'm getting the answer E. Let's see. So which of the following statement is or are correct? You have to tell me. The applicant of SRO for NBFCs should achieve a minimum net worth of 2 crores within a period of 2 years? No, within a period of 1 year. Okay. The applicant shall be set up as a not-for-profit organization registered under the section 8 of the Companies Act of 2013. A maximum of only 2 SROs for the NBFCs will be recognized. So first and third statements were wrong. Only the second statement was correct, and that's why the right answer is E here. Basically, the applicant should achieve a minimum net worth of rupees 2 crore within a period of 1 year. Maximum of 2 SROs will be recognized, and different verticals or divisions within the SRO, like different departments, can be created within the SRO to cater to the requirements of different NBFCs. Okay, so this is the basic idea. Now SROs, they, like all the SROs, the bank SRO or the NBFC SROs, any SRO should be a not-for-profit organization that is registered under the Section 8 of the Companies Act of 2013, and the shareholding of the SRO should also be diversified. It should not be owned by a family, it should not be owned by a single person. We can say the shareholding, no entity shall hold 10% or more of its shares, either singly or acting in concert. Okay, so this is the basic idea. So this is the basic idea of the recognition of SROs. Now we are going to, I'm going to discuss the SRO for fintech sector with you. We are going to have a brief idea. I will be giving you a question from this also. So see, we had the SRO, like the omnibus framework for the SRO was released, that is for the SRO of the banks and for the SRO of the NBFCs. Now RBI has released some special guidelines for the SRO of NBFCs while asking for the applications. So when SRO for the banks, when the RBI will invite the application for SRO for banks, then the RBI will release some special guidelines for the SRO of banks also. But overall guidelines were released by the Reserve Bank of India in March itself for the SRO for banks and NBFCs, that is for the regulated entities. Now the RBI has said that for the SRO of fintech sector. Now fintech sector is a very vast sector, that is many of the fintechs, they are not regulated by any of the regulator in our country. Let it be RBI, SEBI, NABARD or whichever regulatory body. So many of the fintechs, they are very small entities that are not being regulated right now. So it becomes a concerning point. So RBI has said that for the promotion of the self-regulation, we are releasing a separate framework for recognizing the SRO for the fintech sector. Now RBI said that the SRO NBFCs, they are going to cater to the needs of the NBFC ICC, NBFC HFC and NBFC factors. So now there are other NBFCs also, such as NBFCs peer-to-peer lending. There is also the NBFC account aggregators. So they come under the category of fintechs, because account aggregators, they are transferring the information from one place to other place. So technology, much of the technology is required. For peer-to-peer lending also technology is required. So RBI said that these kind of NBFCs, they can come under the regulation of the SRO fintech. That's why the SRO NBFCs, they are focusing on the investment and credit companies, housing finance company and factors. They can have members of other domains also, of other NBFCs also, but mostly SRO NBFCs, they are going to focus on these three categories. So now there is a framework that is released on May 30, 2024. This is the framework for especially the SRO for fintech sector. That is, many of the fintech sector, they are not regulated by the RBI or any domain. And the fintech sector is something that is developing very fast in our country. It is bringing innovations in our country. Okay, as well as it is also raising concerns relating to customer protection, data privacy, cyber security, grievance redressal, internet governance. So we have to balance the innovations and the concerns. So there is going to be the SRO fintech that is going to look after the development of the fintech sector, as well as that is going to make the fintech sector more regulated or more in a way more that is looking after the concerns in the country. Okay, so this is the basic idea, that fintech sector, self-regulation within the fintech sector is going to achieve the delicate balance that is required between decreasing the concerns and increasing the innovation in the fintech sector. Now try to answer this question. So there is a framework, there is an omnibus framework that is for the SRO of the banks and the SRO of the NBFCs. Now there is another framework that is especially for the SRO fintech. Okay, so this question is regarding the SRO fintech. So try to answer this question. Now there are some NBFCs that can come under the SRO fintech, such as the NBFC peer-to-peer lending as well as NBFC account aggregator. Okay, that's why SRO NBFCs, they are going to focus on the investment and credit company, HFC and factors. So anyone that can answer this? I'm getting the answer D. I'm good to see that, okay, you people are reading the notifications carefully. So shareholding of the SRO for fintech should be sufficiently diversified and no entity should hold 10% or more of the shares in either singly or acting in concert. So this is correct. The applicant should have a minimum net worth worth of rupees 2 crore within a period of 1 year. That is also correct. The SRO fintech should be like, it is the self-regulatory organization in our country. So it should only be an entity that is domiciled or registered in India. So that is correct. Now SRO fintech should only have fintechs domiciled in India as members? No. SRO fintech can also have, they could have fintechs that is domiciled outside India as members also. So this is a very important point. Membership in the SRO fintech should be primarily from fintechs that are currently not regulated by any financial regulator. That's why for the SRO fintech, there is a separate framework that has been released, because many of the fintechs, they are not regulated by RBI, they are not regulated by any of the financial regulator. So SRO fintech has to focus on such small NBFCs that are not regulated, that are not under the domain of any of the financial sector regulator. As well as membership may also be open to regulated entities such as the NBFCs that is regulated by the Reserve Bank of India, that is the NBFCs peer-to-peer lending, NBFCs account aggregator and such. But remember that the banks can never come under the SRO fintech. For the banks, a different framework is there, and the banks are going like, they are the regulated entities that cannot be under the SRO fintech. For the banks, for the SRO banks will come for the banking sector. Okay, I hope this is clear. So basically, SRO NBFCs, they are going to focus on the 3 domains, that is ICC, HFC and factors. SRO fintech are going to focus on the fintech companies, the small companies that are popping up that are not regulated by any of the financial sector regulator. SRO fintech can also have the NBFCs that are working in the technological domain, that is peer-to-peer lending, account aggregators and such. SRO fintech can never have banks under the domain. So there will be a separate SRO for the banks. SRO bank. Okay. Now these are some guidelines that you can read, that the minimum net worth of the rupees 2 crore within a period of 1 year, that has to be maintained, and these are the guidelines that are important. SRO fintech should be domiciled in India, but the fintechs, it can have the members that is domiciled outside India also. So this is the basic idea. Now the membership of the SRO fintech should be primarily from fintechs that are currently not regulated by any of the regulator, and membership may also be open for the regulated entities of the Reserve Bank of India such as the NBFCs, but not the banks. Okay, other than the banks we can say. Number of SRO fintechs. So for the SRO NBFCs, 2 NBFCs, like 2 SROs will be designated, 2 SROs will be identified, will be registered for the NBFCs. So for SRO NBFCs, there will be 2 SRO NBFCs. For the fintechs, there is no such details that have been given. So number of SRO fintech to be recognized would be based on the number, nature of the application. Okay. Now functions of the SRO, that is easy, standard setting, oversight and enforcement, development of the fintechs while looking after the regulation of fintechs also, grievance redressal and dispute resolution between the fintechs, responsibilities toward the Reserve Bank to provide the information to the Reserve Bank regarding the fintechs. This is the basic idea that you can read. Now coming to the next question, I hope you will be able to answer this question. Any confusion anyone has in regards to the SRO for fintech? A objective question can come from this, a descriptive question can come from this. At least have the basic idea. You have 5-10 pointers that you can write regarding any of the SROs. Okay. Try to answer this question now that is in front of you. If you have any confusion, you can ask me. Okay, Rohit and Sorish has given the answer. Okay. So which of the following statements is or are correct in regards to the Statistics Day? First of all, Government of India has designated 29 June every year as Statistics Day in the category of special days, and this is to be celebrated in the recognition of the work that has been done by Professor P.C. Mehlbonis, and this is to celebrate the birth date of the great statistician. Okay, so this first statement is correct. Since 2007, this day has been celebrated. The Reserve Bank held its 18th annual Statistics Day conference with the theme RBI Statistics @90. @90 means RBI has celebrated its 90th year. So first and third statements are correct, while second statement is incorrect, and you have to find the correct statement. So this is the answer. So this is regarding the National Statistics Day that you can read. Okay. So this is the basic idea that conference happened and there was the discussion in regards to the usage of the statistics and using technology for the better statistics, better data and information. Now coming to the next question, try to answer this question. Okay, I have started getting the answer. Very good everyone, very good. So see, RBI has announced the shark currency swap framework for the period 2024-2027. Okay, now what has happened under this currency swap framework? Just think about Bhutan. Okay, now shark countries. So Bhutan is a part of the shark countries. Okay, now Bhutan has got into a balance of payment crisis. Bhutan does not have any foreign currency. Bhutan has got under the balance of payment crisis. Bhutan has taken much of the imports from India, from different countries. Bhutan has got the imports. Now Bhutan do not have any currency to pay for the imports. Now Bhutan is under the balance of payment crisis. So RBI, or let's say India, is saying that okay, we are going to help Bhutan. Bhutan can provide its own currency, and against that RBI or India is going to provide the rupees, so that the Bhutan can pay for the imports from India that Bhutan has got. So Bhutan has got, let's say, $10 billion, 10 billion rupee worth of imports. Bhutan has got rupees 10 billion worth of imports the Bhutan has got from India. So RBI is taking the Bhutan's currency and RBI is giving rupees to Bhutan. So this is a kind of swap agreement that has happened, that right now we are giving you rupees and we are taking your currency, but after 3 months you have to pay us back. You have to give back our currency and we will give you back the currency that we have got from you. Okay, and now if RBI is giving rupees 10 billions to Bhutan, that means we are losing interest on this rupees 10 billions. So RBI is saying that you have to pay, the Bhutan has to pay the interest on 10 billions, and RBI is going to pay the interest on the Bhutan's currency, whatever currency RBI is getting, because RBI is also going to use that currency somewhere. So that is the basic idea. So under the framework for 2024-27, a separate INR swap window has been created, that if any country, you know that Sri Lanka has started importing and exporting with the help of rupees. So Sri Lanka and India, they are doing the trade of export and import, and we are using our own currency for the trade. So if a country requires the INR, they can take the INR. This is a swap window facility that has been provided by the India now. So a separate INR swap window has been introduced with various concessions for swap support in Indian rupees. So various concessions will be provided to you, that you have to give less interest rate or something or else. So the total corpus of rupee support is $250 billion. $250 billion. The RBI will continue to offer the swap arrangement in US dollars and euro. Let's say Bhutan also wants rupees $2 billion. Sorry, $2 billion. Okay, so Bhutan also wants, for its balance of payment crisis, it has to give the payments to US, it has to give some payment for the imports to European countries, to some other country. So Bhutan also requires some dollars. So there is a facility that the RBI, not 2 billion, let's say $0.1 billion the Bhutan wants. So the RBI will continue to offer the swap arrangement in US dollars also and euro also under the separate US dollar or euro swap window within an overall corpus of US dollar 2 billion. So this is the basic idea that RBI has launched, India has launched a separate facility of the INR swap, of the rupee swap. Till now we were providing the euro swap or the dollar swap within the corpus of $2 billion. Okay, so RBI was providing the swap arrangement in US dollars and euro under a separate US dollar euro swap window that was having a total corpus of US dollar 2 billions. Now we have said that we are creating a separate corpus for the INR swap also, for the INR swap, Indian rupee swap arrangement, that is going to have some concessions. So we are in a way promoting the trade in the INR, that if you are in a balance of payment condition, if you are importing from India, we will, with concessions, we are going to provide you the rupees through the swap facility. Okay, so this is the basic idea, and for this corpus the rupee support is 250 billion rupees. Okay, remember that this is in rupees and this is in dollars. Okay, so currency swap facility will be available to all the SHARC members countries subject to their signing the bilateral swap arrangements also. So it is Afghanistan, Bangladesh, Bhutan, India, Maldives, Nepal, Pakistan, Sri Lanka, and with these countries especially Sri Lanka has accepted that we are going to have the trade in rupees also. Okay, any confusion here? Any confusion here? Clear? Any confusion anyone has in this regards in the SHARC currency swap framework? So simply this is for the period of 2024-27. What is the corpus that you have to remember for the dollar 2 billion of the corpus for the swap arrangement of dollars and euro, 250 billion rupees of the corpus for the swap arrangement in the INR. Okay. Now there are no more questions, but I am going to show you 2-3 notifications. Now this is for your understanding that okay, these notifications have also came in the June only. Now what you have to remember from this notification that I will tell you. So how many of you remember about the special Vostro account? So special Vostro account, special Vostro rupee account. So we said that if you trade with us in rupees, so our Indian bank, let's say with Russia we are trading in rupees. So Russia is importing from us, from us, and or let's say we are importing from Russia. We are importing from Russia and we will pay in rupees. And this Russian bank is having a account, is having a special Vostro rupee account with the Indian bank. So the Russian traders, they are trading with India and they are getting the money in rupees, and this money will be stored in the special Vostro rupee account with the Indian bank. Now, if we are exporting to Russia, let's say we are exporting to Russia and Russia has to pay us in rupees. So Russia can pay from this account, Russia can pay to us in rupees. So this is special rupee Vostro account. This is special rupee Vostro account. A Vostro account in local currency would enable this is the example of Sri Lanka and India, that Sri Lanka, the Sri Lankan bank can open a account, special rupee Vostro account with Indian bank, and Sri Lanka, if we are importing something from Sri Lanka, we can pay in rupees, we are paying in rupees, and when we are exporting to Sri Lanka, Sri Lanka can use these rupees to pay us, to pay the our traders. So this is the trade that is happening in rupees. We are importing from Sri Lanka, we are paying in rupees, not in dollars now, and this rupees will be kept in the special rupee Vostro account of Sri Lankan bank that is present with the Indian bank, and this rupees can be used to pay for our exports that we are doing to Sri Lanka. Okay, so this is the basic idea. Now with the special rupee Vostro account, there was what was happening, that a special current account was being opened by the Indian banks. So Indian banks was opening this special rupee Vostro account, and with that Indian bank was also opening a special current account for its customers exclusively for the settlement of the export transactions. Okay, so let's say India has like the exporters that are exporting to Sri Lanka, they are getting the money in rupees. So the customers, the exporters that are customers of this particular Indian bank, for them there was a separate currency account, current account that was opened. Okay, so other than the special rupee Vostro account, there was a special current account that was being opened by the Indian bank for its customers exclusively for the settlement of export transactions. Now it has been said that the Indian bank that is opening a special rupee Vostro account can open for its customers, for its constituents, may be extended. Now this special current account, this kind of account can be extended for the settlement of their export as well as import transactions. So this is the basic idea that for the with the special rupee Vostro account, you can have a special current account that can be for your constituents, that can be for your customers or for your people for the export transactions and import transactions. See, in the shark transaction, what is happening? That we are taking the Bhutan's currency and we are paying rupees. We are taking Bhutan's currency, we are paying rupees with the agreement that after 3 months, after 4 months, after 5 months, after 6 months, after a year, we are going to take our rupees back and we are going to pay your currency back. But in the special rupee Vostro account, there is only rupees that is getting involved, no other currency. We are saying that you can import it to us and we will pay you in rupees. You can keep it with our Indian bank, and when you export, when you take our products, you can, from this account, you can pay to us in rupees only. Only rupees is getting included here. Okay, this is the basic idea. You can read more about it. Now I have taken a session on the data for the deposits with the scheduled commercial bank and the credit by the scheduled commercial bank for the March 2024, that is for the financial year 2023-24. there is the deposits with the scheduled commercial bank and there is the credit year-on-year growth that has happened in the credit. So annual basic statistical return 1, that is for the credit, annual BSR, that is basic statistical return 1, and the annual basic statistical return 2 has been filed by the Reserve Bank of India for showing you the deposits with the SCBs and credit by the SCBs. Now you, like, there is the deposit and credit data that has been given in the FSR also. Now that data is different from this data. While both are saying that it is for March 2024, so why that is different? Because under the basic statistical returns, here we are talking about the scheduled commercial banks, including regional rural banks, while in the FSR, we are only talking about scheduled commercial banks, not including regional rural banks. So here the deposit data is important, that the bank deposits has increased year-on-year by 13%, net of merger, that is 13.5% during 2023-24 as compared to the previous year. Okay, and the deposits of all population group accelerated in the latest year. So this is the basic data idea of the deposits. Okay, you can read the data point, nothing much to understand here. And for the credit data also, you can see that it is for the scheduled commercial bank, including the regional rural banks. So bank credit growth has increased year-on-year, that is from March 2023 to March 2024. There is the increase in the bank credit by 15.3% net of merger. 19.1% will be there during 2023-24. That is higher than the previous year. Okay, as compared to the previous year. So this is the basic idea. That is not higher, we can say that if you see for the bank credit increased by 15.3% as compared to 15.8%. So that is the bank credit has grown in 2022-23, the bank credit has grown, and the bank credit above that also the bank credit is still growing. But in the previous year, bank credit grew by 15.8%. Now the bank credit grew by 15.3%. So this is the basic idea. So the FSR data is different from the BSR data, the basic statistical returns. This data is released by the Reserve Bank of India, BSR 1, for the credit growth of the scheduled commercial bank, including the RRBs. Okay, so this is the idea that basic statistical return system introduced in December 1972 has been in force for more than 3.5 decades. The improvements in the system are effective from time to time. Now, the periodicity of BSR survey is annual. So there is the BSR 1 and BSR 2 is released. BSR 1 is for your credit data, BSR 2 is for your deposit data. Okay. Now the basic statistical return 1 and 2, they both tell you about the data for the scheduled commercial banks, including the regional rural banks, while the financial stability report, when it talks about the SCBs, it is not specifically including the RRBs. Okay, that is the basic idea. Next is Reserve Bank organized the BSR at the rate 50 conference on October 28, 2022 to discuss the role of the BSR system in supporting the expense of the Indian banking system to provide the database. Okay. Now the deposit data and the credit data we have discussed. Any confusion now? So now if you have any confusion, you can tell me, as well as in the comment section, do tell me that like how many marks you have got out of 16. So out of 16, how many marks you have got, that you have to tell me, as well as did you like the session, as well as do you want me to continue these sessions for the coming months also, okay, for the July, August and such. And before ending this session, let me show you that this is the website for edutap.co.in, and if you want to know more about the examination, you can go to the blog section and you can go here. Exam information has been provided for different examinations. You can go to RBI, NABARD, SEBI, whichever exam you are preparing for. If you want to get more information about the exam, you can know from here. Let's say RBI Grade B. So if you want to know more about the RBI Grade B, you can know from here, okay. As well as you want the syllabus pattern, whatever you want, the most of the information is provided here. If you want to know about the strategy for the examination, the strategy is also provided for different components, as well as success stories are provided so that you can read about the success of the people and you can know that what strategies they followed, okay. As well as if you go to the main page of the course, like if you go to the main page of the website, that is edutap.co.in, you can go to the courses section. Let's say that you want to take the course of RBI Grade B, you can go to this section. If you want to have the crash course, because the time is less for the examination, if you want to get the crash course, you can go here. You can see that how much off is going on and you can get the course where different faculties are giving you the live classes, the summary sheets, mind map and mock test, okay. So this is the basic idea. Now do tell me that did you like the session of today, that did you like the revision session, because many of the students were demanding the revision session and I try to bring some extra points also in the revision session. I try to bring the important notifications. Even if I have not taught them in the Finance 360, I'm bringing the extra notifications in the revision session. So are you liking it, or I should stick to what you have studied so that you are not getting confused or something, okay. So do tell me that do you like the extra notifications that we are doing, as well as tell me that out of 16 how many marks you are getting, okay. So this is the basic idea. Do tell me in the comment section if you are liking the sessions. So this is it. Thank you so much for attending the session. Ma'am schemes का भी बता दीजिए. Schemes का again 5 months, like 5 to 6 months are most important that you have to do. In the schemes, it's not an option to do less of the months, okay. 5 to 6 months of the schemes you have to do. Thank you so much. And I hope that all of you liked the session. Thank you so much, Rohit, Saurish, Titanium, Padmini, Pooja, Abhay, Ritika, Shwetanshu, Tejaswini. Nidhi, you have to practice a lot. Like keep the data, like write the data somewhere that okay, from this report, these are the data that are important, and just make it monthly data that you can keep. Thank you so much, Captain Saver. Nidhi, write it somewhere. Write it like just download the PDFs, and in the margin area you can write the important data points. Okay, you can like write the data points somewhere. Destroyer, again you have to make your own notes, handwritten, like हाथ से लिखकर data points को लिखो कहीं पर कि हाँ इस वाली notification, इस वाले scheme का ये data point है, then you will be able to remember the data. And like this is the demand of the examination. We cannot do anything. I also know that okay, there is too much data, but if you want to clear the examination, if you want to become the RBI Grade B officer, you have to do the extra efforts, right? You're most welcome, Sandeep. Thank you so much. You're most welcome, Nidhi. Okay, so this is the end of the session. Thank you so much for attending the session. If you have any query, you can write in the comment section also. Do tell me that do you like that I take some extra notifications, I take the extra important notifications in the session, or do you want me to stick to the notifications that we have done in our previous sessions? Because bringing this extra thing takes my efforts, but I want you to get the important perspective. Sometimes in the sessions we do not have that much time, okay, that some sessions like important things come up and some of the topics get left behind. So do you want me to continue taking the extra topics in the revision session, or like should we revise what we have done so that you are not getting confused or the time of the session is not extending too much? And out of 16 marks, how many marks you have got, that also do tell me. You're most welcome, Chetan. Thank you, everyone. Thank you for attending the session. Yes, tomorrow I will meet you for the digital payment index session. This is also going to be very important. So do attend the session. So tomorrow at 10 a.m. we will meet again. Okay. Thank you, everyone. Thank